Good morning, UPBOptionMillionaires.com. It is Tuesday, October 14, 2014. It's the VIX here, and you can see it closed at session highs yesterday on the heels of two other really strong days for the VIX starting at the end of last week. 3 consecutive 1% plus down days for the S&P 500, which is not good. We'll see if we can break that streak today. And you can see back in August, we hit our previous lows and then made our way to new record highs. The VIX got up to about 17. Here it's at 24, 25. The fear is palpable. Of course, it's Halloween season, so maybe that's got something to do with it. I'll show you S&P 500 futures are off their lows here, and we're up almost 0.8%, which is a nice reversal from yesterday's waterfall type sell-off. And if you look, you bring a trend line across, we're bouncing right at former support, which was back at the tech wreck of 2014. When we recovered, got back up to the support level on S&P 500 futures. That's where we're bouncing from. We'll see if this is a short-lived bounce. One thing I was looking for when we started to sell off is a possible head and shoulders topping pattern. We had the left shoulder, the head, we've broken through it. So I don't know, that right shoulder is not going to form. So this is going to be interesting to see how this resolves. Are we going to bounce from here? Are we going to just stagnate? One thing I'd look for too is XLE, which has been leading this market lower, in my opinion, because back in September when that stocks S&P 500 were hitting new fresh record highs, XLE was not. It made a lower high and then continued to the downside. We're seeing a similar waterfall type fall off here from record high prices, and we look for support at the 80 level. We almost hit it yesterday. This morning, reversing course almost up 0.5%. And I think oil has been a key trigger here for continued downside. We have USO continuing. This is the ETF that tracks oil. Got support here at 32. It's still down a little bit this morning in spite of the S&P 500 futures moving to the upside. S&P 500 is clearly broken below long-term supports. It's the Abenomics trend line here, which has worked as support back in August. This time we got back up to it on 2 occasions. One of them a massive 300-point rally for the Dow Jones Industrial Average before kissing it goodbye. And just, I mean, yesterday's action was, you could see the selling. I mean, it's the old, the movie's over and everybody's trying to rush out of one exit door, and that's what it looks like. So we'll see if this continues. Each of the rips that we've seen since hitting record highs only a little over a month ago has resulted in a sell the rip, whereas from 2009, March of 2009, every dip has been a great buying opportunity. We're seeing now the rips in the morning getting sold off, so we'll see if this one holds. Let's look at IWM as well. Broke below this channel that it was consolidating in. This is a great channel, looked very bullish, looked like we were going to bounce. Came up, got back over this channel. Now we're breaking down out of it. So yeah, I mean, the charts don't look too bullish here in spite of the morning ramp we have. And at QQQ, I'm looking for support here about the 90 level. We're down to 93.50. It's been a nice pullback from 100. You see the selling just starting to really pick up steam and momentum. Look support here at about just a little over the 90 level, which is former resistance into this broadening descending wedge. And that sell-off was the tech wreck of 2014 back in April. And we didn't look back after we broke out of that broadening descending wedge until just recently. So we have earnings this week from Google. Google broke down yesterday below support. Look at that. I mean, that's key support for me. We have trendline support, and we have support that at the 550 level was really key. And once it broke below there, it's going to be tough for me to wrap my head around buying calls. But there was a piece out saying that Google's probably going to be the first $1 trillion company, not Apple, so we'll see what happens. In order for that to happen, the stock price is going to have to rise dramatically, or they're just going to have to issue twice as much stock and hope the price per share remains constant. Speaking of Apple, it's back over $100 this morning. Apple, again, to me, the chart looks very bullish. We're still consolidating. Look, everything else is falling off the cliff. Apple is just hanging in there, hanging tough. So if the market can somehow muster some sort of recovery, look for Apple to lead the way. DDD is trying to break back above long-term support. You see it broke down. Yesterday was up in spite of the weak market. So we're looking for DDD. XONE, which had some great movement last week, pulled back yesterday. This morning's up just a little bit. But look at the action, really, off the lows here. Looks sharp for a recovery, possibly up to the mid to high 20s. But we'll keep an eye on that. JP Morgan Chase reporting earnings this morning is down, 1.5%? Yeah, there it is, 1.5%. Still in the confines of this long-term consolidating channel for JP Morgan. So it's going to stay in this range here between 56 and about 62. That was a new all-time record that it hit back at the start of September for JP Morgan. We also have Wells Fargo reporting earnings this morning. I believe it's down also. It's down 1%. possibly come back to this long-term trend line support, which actually coincides with the Abenomics trend line. Goldman Sachs reports earnings later this week, so the financials are going to be really important. Look at Goldman Sachs, came right back to support there at about the 180 level. So this could be a good spot to see a continuation of the upside. Possible move to $200. VXX, the VIX, again, was up near 25 at the close yesterday. And after the bell, VXX was actually up over 40, almost 41, had a late day spike. And now it's down almost 2% here on the heels of this ramp for S&P 500 futures. If you look from the long-term chart, I mean, the VXX basically just, it's a bloodbath. But look at a heavy volume. Look at a nice breakout. So we'll see if this continues. Right now we're down, almost 2%. See if we can get back up over 40. And of course, that's going to imply lower stock prices as the fear spreads like Ebola. Let's look at Solar City, which broke through key support. Look at that. I mean, disgusting. But again, it's the same thing we see when you have some chart patterns forming. Once it breaks out of that chart pattern or breaks below it, in this case, the support is gone. It does it usually in a pretty swift fashion. So you can see the breakdown here for Solar City. That's not a good sign for anybody owning shares, and we'll see if the stock can get back over it, which is, if the market remains weak, highly unlikely. And then we also have Netflix reporting earnings this week, I believe, Wednesday, which would be tomorrow. And to me, this also looks pretty bullish. We had an analyst come out this morning, raise the target to $600. So that implies, I don't know, 30%, 35% to the upside here. So we'll see if that happens. Priceline was beaten down yesterday, recovered a lot of its losses, was down. It looked like it was going to break 1,000. That's how bad the selling was. And you can see, look at this sell-off. Really heavy volume started right at the beginning of the session. We had a quick little pop and then just a complete collapse down to, I think it was about 1017 before it recovered, got up to 1065, $60. So it was very volatile. And that's what we're seeing in this market, a lot of intraday movement, upside and downside. So you either have to be nimble and day trading it, or if you're going to be in anything, you're going to make sure that it's not going to take part in these massive swings up and down. So what I'm doing is just playing it light. I'm in some DDD calls. I'm in some XONE calls. I have some Solar City calls from last week, and those are looking not so good. So that is about it. We got earnings reports coming up. That's probably what I'm going to trade. Google, if we stay here and stagnate, I might be able to get some options there for a move. I don't know what I'm going to get. I might get calls and puts far out of the money and get them out before the earnings report. So we'll see what happens. Google in the past has made some tremendous moves post-earnings. Back in April of 2007, I believe it was, the stock moved 20% post-earnings. We had earnings, I believe it was last year, worked out really well. So we'll look at Google, and then we have Apple coming up. It's going to be a very exciting time with this market gyrating all over the place. It's going to be interesting to see how earnings either puts a floor under this market sell-off or exasperates it. Yes, the big word for today, exasperate. All right, everyone have a great trading session, and I'll see you in the chat room at optionmillionaires.com. It's going to be another wild day. I don't care what stock futures are telling you. We've seen all these rips get sold, so we'll see if this is maybe the rip that doesn't get sold. S&P 500 futures here off their lows from this morning. And you can see the move up. We'll see if this gets sold off and we hit new fresh lows from the highs that we saw back in September, or if this marks a bottom. All right. Goodbye.